All right, we're going to look through the ratio charts now. As a reminder, these are derived charts. These are not directly tradable, but by having one symbol divided by another, it provides, I think, insights. These are not any particular group. It's just kind of a mishmash of interesting pairs charts. First one is Bitcoin versus Ethereum. And as you can plainly see, it was down in the doldrums for a while and then burst higher. Ethereum had I've got, okay, take my brain and reverse it, excuse me. It's totally the opposite, excuse me. Start again. This is Bitcoin versus Ethereum. It shows Bitcoin's relative performance versus Ethereum. So Bitcoin was doing just dandy. It had based here for years, and beginning in 2022 began to sort of beat the pants off Ethereum and just surging here. And by April, Ethereum was just looking like dog meat. It has taken a tumble since then, and in my estimation, it's probably getting near what we could call a level of support where Ethereum will settle down and maybe start to re-weaken. And we'll look at that back afterwards in a moment. This is a new pair. This is CompQ. I've lost the All World Index for some reason, so I've come up with a couple of new ones. This is the CompQ, that is the Nasdaq Composite divided by silver. Think of it as normalizing the chart by way of real money. You can consider gold real money, silver real money. I would prefer to use gold, but our gold data doesn't go back except to like the year 2000, and I'd really rather have more data than that. So silver's not horrible, and it does show this major top in equities versus silver, and it's ascended mightily since then. We're just kind of flatlining here recently. It's not too clean of a pattern yet, but it at least illustrates that when you look at equities under the hard lens of normalized value, it's less than it was back in the late 90s. So this is all a product of hyperinflated dollar. The dollar's worth toilet paper, and so stocks look incredibly valuable. Here's the Dow Jones Composite divided by silver. Same idea, but a little more effectively presented. You can see quite plainly the rounded top here and this rounded top, which is about 90% done. So what would be exciting over the long term, like the rest of this year, all of next year, would be a failure of that, a completion of that pattern. With respect to a you are here moment on this one, it puts us around, I don't know, late 2005 or so. So now this is the upside down version of what you saw earlier. This is Ethereum versus Bitcoin, which shows just how dreadfully Ethereum had done versus Bitcoin. And recently we got this just massive surge higher, like doubling in relative performance, and that was very clear from Ethereum itself. And again, I think that's going to dissipate. It may have started to do so already. This is the Dow versus silver. You kind of get that idea already. This is the relative performance of the Nasdaq 100 versus the small caps. Quite plainly, Nasdaq has outperformed the small caps for, going on almost 20 years. Everyone's crazy about tech. Continuing on, we've got the Russell 2000 versus gold, and this shows why the relatively small amount of gold data, just a quarter century, is a little irksome to me. I prefer to go back like 50, 70 years, but you get the general idea from the analog I'm showing here. Going back farther, this time with silver, the small caps, you can see what's going on. Major top here, breakdown, retrace, and then all holy hell broke loose after the summer of 2007. We've got a diamond here versus the semicircle top here, this rounded top. But we've got our failure, and I think this speaks well to the much lower values to come. Here's the S&P versus the GDP, rather lofty, obviously. Here's the S&P versus I went through this before, trying to figure out what on earth this crazy symbol is. Oh, it's the M2. Okay, so that's the S&P relative to the money supply. So once again, quite high. Here are the two prior major tops here, the internet bubble and the housing bubble top. This one's rather vexing because it's actually blasted high and pushed above that top, which kind of ticks me off. So we'll see. This is the equal weighted versus the normal S&P, indicating the collapse of breadth, the importance of a very small concentration of stocks for years and years, as you can tell. Transports versus the money supply, pretty dull. XOI versus the money supply, quite interesting. This is the fourth major reversal pattern here. I think this speaks well to the prospect of the oil sector turning south quite hard. Here's CompQ versus money supply. Once again, an ascending wedge for many, many years and quite high within that wedge. And mind you, it's higher now, and just take a moment on this, because this data on the M2 is very infrequently and it's very laggy. So we're in the mid-August now. This is only as of June. So, that value is absolutely higher, much higher now than it was in this. This is the S&P divided by the 10-year yield, formerly known as the most important chart ever. It's not anymore. This is kind of interesting. Here's Kathy's ARK versus the cubes. She's done pretty well for herself lately. Here's XME versus GDX, and I'm short XME largely because of this chart, because long term it suggests much lower prices relatively for XME versus GDX. We seem to have turned nicely south from that blast higher. Here is gold versus some crazy symbol. I don't know what it is. Obviously a very strong breakout. I think it's the CPI, but this is gold versus the S&P 500. Looks like it has a great future ahead. This is gold versus the US dollar. Yeah, it's kind of gotten away from itself. Relative to the dollar, it's quite expensive. Palladium, meh. Here's palladium versus gold. Obviously, tremendous underperformer. It had a burst of excitement there that ended about a month ago. And then palladium versus the US dollar didn't quite escape from that bullish setup. Silver versus gold. Silver's been quite weak until recently. Silver had a nice run for a number of weeks. Very powerful, catching up with gold. Silver versus the spider. I think it's got a fantastic long-term future ahead, but hasn't quite broken out of that base yet. Silver versus the US dollar. It's already cleanly broken out. In fact, this base here probably should be a little deeper than it is. Something like that, I think, is more appropriate. And finally, here's the spider versus the bonds, SPY versus TLT. Draw your own conclusions. It looks to me like this is just hanging on by its fingernails. And that's all, folks.